Strong earnings, you're bucking the trend here. How do you explain this big uptick in deposits?
Sure. Thank you for having me, Emily. The big uptick in deposits reflects the fact that for the first time this quarter, we had our national bank open. And having a bank license allows us to actually offer the consumer an interest rate on checking or savings that we determine as opposed to a bank sponsor determining it. And we've taken an approach where we really want to be the primary relationship with our members. We want them to be with us for all the major financial decisions they make in their lives and all the days in between. In order to be that primary relationship, we really need to be the place they do their direct deposit. So we're offering them 1.8% interest if they do direct deposit with us. And that's on checking, no minimum balance, no restricted on spending. They could spend when they want. They just have to do direct deposit with us. And that's allowing us to use those deposits to fund their loans at a much lower cost. And so the two businesses are really synergistic. A higher interest rate in checking gives us more deposits at a lower cost, so we can lend more to more people, and it drives a great virtuous circle.
Now, I know you're expecting strong growth in the second half, but you've got a recession looming. We've got all these dire warnings from policymakers, from other CEOs. What are you preparing for?
Sure. Well, we've been preparing for a war since March of 2020. When the global pandemic hit, the president of the United States told federal student loan borrowers they didn't have to continue to make payments on those federal student loans as part of the CARES Act. And that was incredibly important for our country. Well, that had a negative impact on our student loan refinancing business. If you're not paying your student loans, there's no motivation to refinance into a lower rate. So that business went from generating about $2.1 billion in originations 2.5 years ago in Q1 of 2020 to only $400 million this quarter. Well, the reason we've been able to drive record revenue growth this quarter and the prior 3 quarters is because we're a one-stop shop for the consumer's financial needs. So we have businesses that can operate and overcome challenges in one area to another area. As an example, our technology platform business, we're building out the AWS fintech through 2 companies, Galileo and Technisys. Galileo saw an acceleration in its revenue growth because of the greater need for people to lower cost and use new technology platforms. So we really benefit in different environments. And in this environment, we're seeing great trends in personal loans, checking and savings, invest, strong demand on credit card, and also strong demand for technology services.
Now, you've got the student loan moratorium set to end at the end of this month, but it's unclear what the Biden administration is going to do, if it's going to extend that pause, follow through on this idea of maybe canceling student debt altogether. What are you preparing for there? I mean, does the war continue?
Yes, it does. Our outlook for the second half of 2022 assumes the student loan moratorium continues throughout the entire year, and also that the president does provide forgiveness at about $10,000 for individuals. If that actually happens and it's definitive, we could see a little bit of benefit, but we're not counting on it. We assume the moratorium will continue through the end of the year. But once the government makes a definitive statement, then people can make real choices. Right now, they're doing nothing, and it's actually hurting them. They're not benefiting from refinancing before rates go higher, and they're expected to go higher, so they'll lose some of the savings. In addition to that, they're not sure how much is going to be forgiven or if it will be forgiven at all, so they're not sure if they should refinance at all. So once we have a decision, we'll be able to pivot off of that and go to market in a concerted way. But right now, we're anticipating no benefit of the moratorium ending before the end of the year.
Meantime, we still have what seems to be a deteriorating macro environment. Walmart just announced more layoffs today. Robinhood announced yesterday they're laying off 23% of their workforce. Robinhood is a competitor to SoFi in some respects. I was on this call with Vlad Tenev, the CEO, who said, he anticipated good market conditions would last longer than they've lasted. So that's on me. He used those words. What's your own approach to hiring and other costs? I mean, is there any chance this is coming for you?
Well, we've been belt tightening since March of 2020 when that largest business and our most profitable business got cut by 75%. And so we've been pretty prudent about how we're allocating our capital and what we're investing in. We've delivered 8 consecutive quarters and 3 quarters in a row of record revenue. And we hit GAAP profitability in our bank for the first time this quarter. And that's because of a prudent relationship between how much we invest, what risk we're willing to take, and also dropping it to the bottom line. So we endeavor to drop about 30% of incremental revenue to profits and reinvest 70%. That keeps us disciplined on the cost side of the equation and not build up a fixed expense that we can't cover with incremental revenue.
Meantime, we're seeing bigger tech companies, huge tech companies, Apple, Amazon to a certain extent, encroaching on the fintech space, Stripe as well. How big a threat is this?
We don't really see them as competitors. We are a consumer-facing financial services provider that's using modern technology to deliver that service. We have pretty big moats built around our business. The lending business is really hard to get into. It is capital intensive, and while they have a lot of capital, they don't have the credit and risk and marketing capabilities that we have. In addition to that, people need to trust you. We have spent a lot of money to try to build trust and reliability in our products and services and become a household brand name. Ultimately, when people give us their money, they need to know it's available 24/7 and that we'll be there for them. And that technology is very different than the technologies they deploy today. And so while it's a big opportunity, no one's really captured the financial services sector the way Amazon has retail or YouTube has in the media sector, or we've seen in the travel sector. And one of the reasons why I joined SoFi was I understood what those limitations were and why it hadn't been disrupted. And we're focused on being the winner that takes most in fintech.